Good morning, traders. Today we are focusing on the Nasdaq. The tech heavy index has had, of course, quite a week after taking a beating since last week, last Friday, then Monday closed lower, and we had Tuesday reversing, Wednesday up, Thursday we go down to 23,500 and a swing all the way up to have a positive close again at 24K, above 24K. We finally see prices importantly, right, closing above the 24K and also back within this territory. Why is this important? This bounce is important because the Nasdaq tumbled over 10% from its high, okay, which brings us down to around, let's just look at this a bit more officially, 23,650, let's say. It's a 10% decline. Okay, so that was an official entry to correction territory. But as we noted on the weekly, if I'm not mistaken, if we don't close for 3 sessions below that level, there is no confirmation. So look at this. We had Monday, Tuesday, Wednesday went all the way up and closed above 23,650, which means we could be seeing a false break below that correction territory. And currently, this neckline of the double top pattern plays a critical role, as well as, of course, the 10% decline. So what sparked the yesterday's relief rally? It comes down to a slight easing of geopolitical tensions, rising hopes that more commercial traffic may soon be allowed through the Strait of Hormuz after Iran announced that it was drafting a protocol with Oman to oversee maritime transit. Um, we need to be careful, of course, reading too much into yesterday's bounce or into even today's price action, because we are heading into a holiday weekend. Institution volume liquidity are very low. Today is going to be likely very quiet, and Monday is also expected to be very quiet. European and London desks are going to return fully on Tuesday, and Tuesday is going to be the day to revisit this. Now let's look at the daily. We have had a double top, and we set this range from 26,300 all the way down to 23,850. We broke that level, which suggests also here that we have had an official double top formation. On a closing bias, as I said before, we didn't confirm the breakdown, okay? And because we didn't get 3 consecutive closes. So the bounce above the 24K. Now listen to this. We have the 24K. We have the neckline supports at 23,800 and whatever that is. And we also have the 10% decline, which is at 23,750, if not mistaken. So this zone is going to be very important. We are likely to see prices actually oscillating here for a bit longer. Let's not forget the NFP today might move markets, but I'm not just too sure how much of an impact that will have and whether it's going to be directionally powerful. So we'll have two clear paths moving forward into next week. If this bounce gains traction, when institutions return on Tuesday, the immediate upside target is going to be, of course, the short-term peak at 24,200. And then above that, we'll go to this liquidity sweep level at 24,810. And if we do break above that level, we are probably just going to call this a false break, invalidate the double top, official double top and correction as well. Don't get me wrong, corrections do happen, okay? But they actually lead to upside anyway. 70%, 80% of corrections actually result in upside. But, typically they do cause bigger downside moves. And with that said, if Tuesday, for example, brings renewed selling pressure and we officially break and hold below 23,650, the floor opens up. The first major support, of course, is at 22,800. Then you have the 22,650. But here's the thing: if we look at the measured move, which of course is the 100 Fibonacci or the 100 range of the neckline, the distance, right, from the breakout point, we are going to look at a much deeper drop towards the 21,390, 400, let's call it. So enjoy the weekend, stay defensive on Tuesday's open, and watch how the market reacts to that level, even if it is ahead of Tuesday, because as I said, we do have the NFP.